Home equity lines of credit have become the fastest growing kind of borrowing in Canada, reaching a record total balance of $230 billion. But while they've grown popular, they can make a household more vulnerable if not repaid properly. 40% of borrowers don't follow a fixed schedule to pay down their principal. Now, to help us get through all of this, we're joined by Brian Betz, debt counselor with Money Mentors. Brian, always good to have you on the show.
Thank you, Shauna.
Why are home equity lines of credit growing in popularity?
What happened to mortgages? Pay down your mortgage, move on. You know, people have been lulled into a false sense of security here with house prices continuing to rise and interest rates low. So, you know, it's an easy way to access capital. And the biggest issue we find these days is not, you know, people wanting to renovate, although that's, you know, a big portion of it as well, but just people using the easy money to access or to influence their lifestyle, to live beyond their means. And that's the one that we really have trouble with, and we see a lot of our clients come in and they're making minimum payments, they're making low, but you know, they use it to fund their lifestyle. It's a big problem.
Oh, so yeah, not just doing renovations as many people maybe started out using them. They have that pressure to, as you said, extend their lifestyle, live beyond their means.
Yeah, it's just so easy to access. So, oh, the kids have to go to hockey school or off to camp, or, yeah, no, we want to buy some new appliances. Again, quit watching those home and garden TV improvement shows, okay?
They're just too good, though.
Everybody looks at them, oh, we should do that, we should do. I mean, yes, I mean, renovation's great. That's not a problem, but again, it's just that access to easy money, because one of these days, interest rates are rising, we know, on mortgages. Interest rates are going to affect your line of credit. Interest rates are going to affect your mortgage. About 50% of mortgages are coming due this year. So there's going to be a squeeze coming, and what we'd like to see is those balances go down instead of remaining flat or even going up.
Are there potential risks borrowing against your home, I'd assume?
You know, the one that I really talked about just now was the interest rate thing. I mean, we know that is a problem. People need to get a grasp on it. And again, lulled into that false sense of security of house prices continuing to rise. My own thinking there is that's a boomer phenomenon, and it's about to end. So a lot of millennials are just renting. They're not buying. They're not going into the housing market. And all of those large equity increases that you've seen over the years are going to stop. So now if you have an outstanding line of credit and all of a sudden your house values are flat or continuing or start to, you know, decrease, then again, that's going to add a lot of stress to your financial budget.
Is there ever a situation when you'd recommend this?
Well, certainly, I mean, home equity line of credit for a renovation is an ideal scenario. So you don't have the money, you want to increase the value of your property, so it's kind of a hand-in-hand thing. Yes, you're increasing your debt through that home equity line of credit, but you're also increasing the value of your property, presumably through the renovations that you're doing. So to me, that is the ideal scenario for using a home equity line of credit, but not for buying a car, not for buying appliances. It's just a renovation tool in my mind. I want to see those balances come down on the mortgage, come down on the lines of credit, so that people can get their debt paid down and start saving for retirement.
Well, Brian, what about re-advanceable mortgages?
So this is a new thing that they've come out with, and it's something I caution people, most people it's not going to be applicable, because really what a re-advanceable mortgage is for every amount that you pay on your mortgage, they will then turn around and advance you that money on a line of credit, which presumably is to use for investments where you can write off the interest. It's not a tool for the average consumer, more for the savvy investor, and something to be very careful of, because again, you're not seeing your balances go down on your mortgage. So I would try to avoid that wherever possible. Okay,
let's talk then about the advice of the home equity line of credit, managing it, recognizing before you're in over your head to make sure you don't get in that situation.
So number one, again, do a budget, do a spending plan, figure out how much you can afford every month, and then set a fixed term repayment schedule. So, okay, now we've borrowed $30,000, we did the kitchen, and now let's, in terms of adding on to your mortgage, here's another loan payment every month, every month, every month, and not adding to it as you go on. So when you do access it, establishing a plan right up front in terms of, okay, yeah, it is $30,000 and that's it. We're not going to go beyond that. We have an established plan for how much we need and what we're going to do. The temptation is always to do more. It's like going to buy a car. They want to entice you with all of the options and everything. Do what you need to do and then move on from there. Negotiate a lower limit. The banks obviously love these lines of credit. It's a way to, again, give you easy money and get your debt levels higher. And so, again, if you only need $30,000, then keep it at $30,000. Don't say, oh yeah, $50,000. That $20,000 can just burn a hole in your pocket. And as part of that, creating a financial plan, creating your budget, establish an emergency fund. We talked about this a few months ago. It's something that everybody should have in case things happen. Then you can go towards that, draw your money out, and you're not tapping in and creating more debt as you move on.
Phew, those are a lot of tips. Very good to go over them. And Brian, I guess bottom line too, don't do it on your own if you have questions, right?
If you have questions, certainly we're always here to help. It doesn't cost you anything. Give one of our counselors a call. We'll go through your budget with you. You don't have to be in financial trouble. If you just want to do better with your money, just give us a call at Money Mentors.
Thank you very much, Brian.
Thank you.
And that is Brian Betz, debt counselor with Money Mentors.